I've been investing for over 24 years before smartphones, TikTok finance gurus, or viral investing hacks. I've watched the dot-com bubble burst, survived the 2008 financial crisis, and invested through a global pandemic. And one of my biggest lessons learned, it's not about time in the market, it's about time in the market. But here's what most people get wrong. They waste years chasing hot stocks, cryptos, and listening to background noise. Today, I want to show you 5 Vanguard funds to hold forever. No hype, no stressful trades, just simple, proven funds that quietly build wealth in the background, even when life gets busy. But first, I want to use personal experience to drive home the importance of investing. Investing into assets is a must. I invested £500 a month into a stocks and shares ISA at 18 for 6 months, but stopped and spent all of my money on a lad's holiday to Ibiza. Huge mistake. This was down to a lack of financial education. Let's say I was taught about things like compound interest at school. I know I would have invested from 18 to now 42, so that's a full 24 years. If I got average returns of 10%, that would mean I would be sat on £594,000. And looking at that huge amount, £450,000 of it is made up of interest earned. This is the power of consistent investing in index funds, the power of compound interest. Let's look at another example before we look at the 5 best Vanguard funds. If you invested £500 a month for 30 years, that would mean just over £1.1 million, an early retirement if you invested in your 20s. Number 5, Vanguard FTSE Developed World ex-UK Equity Index Fund. Starting at number 5 is a fund I believe every UK investor should consider. Let's break down why. Most UK investors are naturally biased towards UK stocks. We hear about them on the news every day, but the UK makes up less than 4% of the global stock market. This fund invests in major developed markets outside the UK. That means the United States, Europe, excluding the UK, Japan, Canada, Australia, and other advanced economies. By holding this fund, you instantly diversify away from relying purely on the UK economy, which is crucial given our relatively low economic growth compared to global averages in recent years. Performance-wise, over the last decade, this fund has delivered strong, steady returns, tracking global growth while smoothing out the volatility you'd get from betting on individual countries alone. Ongoing charges, only 0.15%, which is exceptionally low for this level of diversification. I personally think that this fund is worth considering. My opinion. It's the kind of fund you can hold forever, reinvest dividends, and just let it do its thing. Let compound interest do its thing. Number 4, Vanguard FTSE Global All Cap Index Fund. Next is another fund I think is worth considering, the Vanguard FTSE Global All Cap Index Fund, and it invests in over 7,000 companies worldwide, large, mid and small cap across developed and emerging markets. Imagine owning shares in Apple, Microsoft, Amazon, US giants, Nestle, Toyota, global brands, Tencent, Samsung, Tata Consultancy, emerging market leaders, plus thousands of others around the globe. Why do I love this fund? Because it represents practically the entire investable world stock market. If you only wanted one fund to hold forever, this could be it. Ongoing charges around 0.23%, slightly higher due to its breadth, due to more diversification. Accessibility, available in both accumulation and income shares classes for your ISA or SIP. For UK investors aiming for simplicity, this fund removes the need for complex asset allocation strategies. You invest, you hold, you reinvest dividends, and you let global capitalism work in your favour. Remember, every time someone buys an iPhone, shops on Amazon, or uses a Samsung phone, you benefit as an investor in this fund. Before we go any further, this video doesn't contain any financial advice. The full disclaimer can be found below in the description. Number 3, Vanguard Life Strategy 80% Equity Fund. Number 3 is a set and forget option. Vanguard Life Strategy 80% Equity Fund. This is what many financial advisors are likely to recommend for clients who want growth with a touch of stability. Here's how it works. 80% equities, globally diversified shares for long-term growth, 20% bonds, UK and global bonds to reduce portfolio volatility. But the best part, Vanguard does all the rebalancing for you automatically. So when markets rise or fall, your allocation stays on target without you lifting a finger. Ongoing charges around 0.22%, which again is low considering it's a fully managed portfolio. Why do I like it? Because it helps investors avoid emotional decisions. When markets crash, the bond allocation cushions some of the fall, making it easier to stick to your plan. And when markets boom, you still get strong equity returns. If you're someone who wants to invest monthly into an ISA and not think about it for 20 or 30 years, life strategy funds are ideal. I really like the life strategy fund, and I personally invest into a life strategy 100 fund. This is 100% stock, so it's higher risk, but that suits me as an investor because I intend to invest for the next 20 years at least. A question you might be asking is, how do I buy using my ISA? Well, if you see below, I've done a recent video all about the stocks and shares ISA in the UK and how you can use them for early retirement. Number 2, Vanguard US Equity Index Fund. At number 2, we have the Vanguard US Equity Index Fund, which gives you exposure to over 3,500 companies across the entire US market. Why invest in the US specifically? Because historically the US has been the biggest global growth, home to companies driving technology, healthcare, finance and consumer trends worldwide. Apple, Microsoft, Google, Tesla, Johnson & Johnson, Berkshire Hathaway, thousands more mid and small cap innovators. Performance over the past decade, US equities have outperformed almost every other major market. And while past returns aren't guaranteed, the US remains the world's largest and most powerful economy. Ongoing charges just 0.10%, one of the lowest you'll find for such comprehensive US exposure. I would use this if you want to get exposure to the US, again, which is the biggest economy in the world. If you're not quite sure what an index fund is, or you want a bit more info to improve your understanding, type yes below and you can get a copy of my index investing cheat sheet. Number 1, Vanguard FTSE All World ETF. Finally, the number 1 Vanguard fund to hold forever, or you could hold forever, is the Vanguard FTSE All World ETF, ticker symbol VWRL. If you prefer ETFs over mutual funds, this is the easiest way to get global equity exposure in a single fund. What's inside? Over 3,500 stocks across nearly 50 countries, 60% US, 20% Europe and developed Asia, 10% emerging markets, 10% other global regions. Why do I love it? Because it gives you everything you need as a long-term investor in one fund. Instant global diversification, quarterly dividends if you want income, eligible for ISA and SIP, easy to buy on Vanguard, free trade, trading 212 and other UK brokers. Ongoing charges about 0.22%, which is really low. Again, if you're aiming for simplicity, this fund is a fund you can buy each month, reinvest dividends and build wealth without ever needing to check the daily news or guess which country will outperform. If you want to simplify things, you could just invest into the SP 500. But my preference is to be more diversified, like the fact that the funds mentioned in today's video have thousands of companies spread out across the globe. Where the S&P, you get an exposure to 500 companies. Summary. Look, I've been investing for 24 years. I've invested in index funds, individual stocks, property and crypto. And while there are opportunities in all of those, I feel strongly that low-cost index funds are the perfect starting point for any investor and should be a big part of your portfolio. But that's just my opinion. These Vanguard funds are perfect for that strategy. Let me know in the comments, which of these funds do you hold at the minute, or which are you planning to after this video? If you found this little video helpful, give it a thumbs up, subscribe, like, all the good stuff, and look out for videos coming up, because this channel is all about simple investing videos that are going to help you retire early, so you're not working late into your 60s or even early 70s in a job you don't even like. I'm trying to use my experience to help you as an investor. Anyway, thanks for watching.